Welcome to the Safe Money Retirement Show with certified financial fiduciary Tim Wood.
Let's sit down and make an actual plan, and we have definitely got to factor in that retirement danger zone. I wish to God someone had sat down and done that with my dad. We wish we would have known about these things.
Tim is a retirement and income planning expert, best-selling author, and the founder of SafeMoneyRetirement.com. Tim focuses on wealth management, retirement income, tax and long-term care planning, and so much more.
Today is your opportunity to build the tomorrow you want. You've got an 87% chance of success. Well, son, that's a 13% chance of failure.
And now, the Safe Money Retirement Show with Tim Wood.
And we welcome you into this week's edition of the Safe Money Retirement Show. As always, we're here with Tim Wood. He's the founder, president, and certified financial fiduciary with Safe Money Retirement. My name's Kevin McAlpin, and Tim and I thank you so much for joining us on the show. We hope your holiday season's off to a great start, and we got a lot to get to coming up on today's program. Coming up in just a little bit, how much risk are you taking on in your portfolio, and does that really match up with your risk tolerance? Plus, what role does debt management play when it comes to your retirement planning? And of course, we'll get into our Safe Money story of the week. That and more. If you'd like more details, you want to sit down with Tim, 800-913-SAFE. That's 800-913-7233, or online anytime. It's SafeMoneyRetirement.com. That's SafeMoneyRetirement.com. So, Tim, we know artificial intelligence remains one of the hottest trends when it comes to Wall Street, but will it end painfully for some investors? That's a big question that was posed to economist Mohamed El-Arian recently on Yahoo Finance. Take a listen to what he had to say.
So there are elements of a bubble, which means that people will end up with losses. But the aggregate value of what's being created is significant. And therefore, it makes sense. The payoff is so large that it is rational to have multiple investments and to overinvest. So the good news is that will make us more innovative, more competitive. The bad news is there will be tears, there will be losses, because elements of it are elements of a bubble.
So, Tim, let me ask you, when new clients come in, you sit down, you start talking about risk. How often are they surprised by how much they're actually taking on when it compares to where their risk tolerance really lies?
All the time. All the time that happens. People come in and I'll basically say, listen, what you need to do is, I'm not saying to pull everything out of the market. Absolutely not. No, don't do that. But what we need to do is we need to protect what you've got to have for your retirement. Now, that's going to be different for everybody. For one person, it might be, I only need $150,000 protected no matter what, and the rest can be quote unquote play money. Okay. For another person, it could be, 80% of a $5 million portfolio they need to protect. It's different for each individual person. But yeah, that bubble, sooner or later, he's absolutely right. The bubble is going to burst. And people all the time ask me, we've talked about this before, Kevin, people all the time ask me, well, when is the best time to make a move, to get out of the market and to get into something that's safer, to get away from the risk? Well, you can talk to literally anybody, even if you talk to someone that absolutely hated the fixed plans I do, okay? You could talk to someone that absolutely hates what I do and ask them, when's the best time to make a move? They're going to tell you it's whenever you're at the absolute top of the curve of whatever you're in, whenever it's grown as much as it possibly can before it goes off the cliff. Well, we don't know when that cliff is. If I did, it would be great, but I don't. I don't have any way, just like anybody else doesn't, to know when that's going to happen. But I know a lot of people right now have made quite a bit of money in the market over the last few years. Things are looking really good right now. This might really be a good time to think about getting yourself out of that bubble, getting yourself out of the position that if the bubble burst, if we have another 08 and 09, if the market were to go down 50% and you have $500,000 in your account, well, in less than a year, you could be down to $250,000, and now that's all you've got left. And if that's all still in pre-tax, you don't even have $250,000.
Right.
So it's a matter of really sitting down again with each person individually, and let's make a solid plan to make sure you're not in that bubble with everything that you've got. You haven't pushed all of the chips in the middle of the table in the at-risk bucket. If you're in your 20s or 30s, you might be able to be all at risk. Because even if the market were to go down 50%, and you've got 30, 40 years till you're going to retire, it'll probably come back. I mean, it always does. I'm sure it will. It'll be fine. But if you're in your 50s, 60s, 70s, not so much. Remember that market math you've heard me talk about before. You lose 30%, you need 42 to 43% just to get back to even. You lose 50%, you need 100%.
Right.
That's why some people, it took a decade or longer to recover from 08 and 09, because they had to literally do 100% growth from where they were just to get back to where they were, just to get back literally to even to where they were. So all that being said, right now we are in a prime position to have people think about moving from at-risk accounts in that bubble, things that could go down, if anything changes overseas, here domestically. I mean, there's so many things that could change to make the market react almost instantaneously. Sit down with someone that can show you what your options are, and let's protect what you've got to have for your retirement so you don't have to worry about that bubble bursting like he was talking about.
If you have similar concerns about the market and the bubble and potentially the burst we could see down the road, and if you are nearing retirement, that's the last thing you want to have to worry about, that roller coaster, the ups and downs when it comes to the market. Let Tim Wood and his team at Safe Money Retirement, let them put a plan in place for your financial future so you don't have to constantly be checking what's going on Wall Street. 800-913-SAFE. That's 800-913-7233. The website, once again, folks, is safemoneyretirement.com. That's safemoneyretirement.com. So, Tim, what you're saying essentially is there are a lot of lessons we can take from previous bubbles, whether it's the .com, whether it's crypto. There's a lot of things that we can take from the past and really, learn from and really, help us, kind of see what happened before to apply to what could happen in the future as well, right?
100%. And I know people that are listening to the radio show or the podcast, they can't see things in my office, but if I could take the video camera around and show you, I've got multiple things in my office that show all the crashes. And literally the very last of them, it says, do you think this time's going to be any different? Just pull up the market just from like 1980 to now. And look at where we're at. Look at where it was in 80 and look at where we are now, and just look at what's happened every time when it goes up. What happens next? What happens next? Every time. 100% of the time.
Yeah.
Is this time going to be different? Are we just going to keep growing forever? Really? You need to make sure that you've got a plan so you are prepared for what's going to come next, because it's going to come sooner or later. And, it depends on how long you live as to whether you'll live through it. We hope that everyone listening is still going to be around for a long time. So you need to make sure that you've got what you have to have protected for retirement. And in at-risk accounts is not protected for retirement. And I just want to put this in there. Even if you're in an account that may have some level of buffer, because some of the at-risk accounts do have a little bit of a buffer, but that still doesn't mean, even if you've got, say, a 10% buffer, if the market goes down 40%, you still lost 30. So again, let's make sure you've got what you need protected. Make sure you've got enough income. Make sure you've got some growing that you can pull from if you need to. Make sure you've got enough set aside for long-term care or for your dependents or whatever your situation is. Let's sit down and make sure you've got a very valid, viable plan that's specific for you to make sure we can get you where you want to go.
Again, the website is safemoneyretirement.com, safemoneyretirement.com.
It's now time for our Safe Money Story of the Week. Visit safemoneystories.com to view more.
For this week's Safe Money Story of the Week, I am going to talk about a very sweet couple from North Carolina that I spoke to just a few weeks ago, and they had all of their money still at risk in the market. They came in, they had a substantial amount of savings, but literally 100%. Now, they had a little bit of cash. I shouldn't say 100%, but well over 90% of their total liquid assets were all still still at risk in the market. And when we sat down, when they first came in, they're like, oh, yeah, well, I've got this and this and this. I mean, they were, very impressed with themselves, which that's great. You did great. That's fantastic. But first of all, you don't have what you think you have because these are all pre-tax accounts. So you think you've got all this money, but I hate to be the one to tell you, this is all pre-tax money. You don't have that much money in that account. What's your tax rate? Plus, they're in North Carolina, so there's state tax. So let's take off another 4.25% on top of that. So that's okay. Here's what you've really got. That's great. Now let's figure out how, again, just like I said earlier, how much do you need to have for your retirement no matter what? Because right now, everything you've got is at risk. He was actually still fine with everything being at risk. He was a risk taker. He's always been in the market. He's a huge risk taker. She was not fine. She was not fine at all. She was sitting over there. I think she was literally biting the inside of her lips while he was talking to me. And sooner or later, she just erupted and said, I'm not fine with it. And we sat down and we made a plan to make sure that her needs were covered too. And her needs were protected income. There's something on my website called the RISA, the Retirement Income Style Awareness. Y'all have heard me talk about it before. I suggest everybody listening needs to do it. It's going to take you 5 minutes and it's going to tell you, and I would have a married couple, I have each person do it separately. Don't do it together, do it separately, because husband, you're going to have different feelings and wants than wives. Mm-hmm. We need to know both so we can make sure we've got a plan for both. So what did we do with them? He still wanted to be able to, quote unquote, play in the market. He liked playing penny stocks and he likes this whole AI stuff. And I mean, great, go get them. Knock yourself out. That's fantastic. That's your play money. But how much do you need to have? How much does she need? If you were to pass tomorrow, how's her income going to be? So what we did is we actually sat down and we created 2 new plans. He still kept an awful lot in the plans he had in the market. So he didn't get rid of his brokerage accounts, but we did start a guaranteed lifetime income plan that was going to defer for a few years that she could turn on immediately if she needed to, or would be turned on in the future. That combined with the survivor benefit from Social Security if he were to pass, because she would get his bigger Social Security, that plus the Social Security would give her enough of a floor to cover all of her expenses. Well, you should see the demeanor change on her face. She's like, so he could pass tomorrow, and with his Social Security and with this plan, I'd have enough to cover my expenses. Yes. And then you've still got all this other. So then what we did is we took a little bit more and we actually put it into a growth plan. Again, money that he wanted to make sure that no matter what, even if there's a major crash, even if the bubble burst, even if all the penny stocks go to zero, you've got this money over here protected. So we took a decent little chunk and put it into a growth plan. So then they had money growing, no fees, no chances of losses, can withdraw up to 10%. I mean, there's specifics for each individual plan I'd have to talk to people about, but they were totally happy. So she got the guaranteed income plan, so she knew that was covered. They had a growth plan, so that was covered, and he still was able to, quote unquote, play in the market because we didn't take everything. We still left him a really nice chunk so he could play and do whatever he wanted to do. Everybody left happy, especially her. Mm-hmm. She was so relieved. You could almost see the weights going off of her shoulders as they were leaving. Big hug from her. Thank you so much for what you're doing. This is fantastic. They've actually already referred me to 3 people. Sometimes you get someone that really you connect with, and I really connected with them. They were fantastic. Left really happy, knowing that she's covered for income. So is he. They've got what they need protected. They don't have to worry about it. And he can keep, quote unquote, playing. And I told him at any point in the future, when you get tired of playing, because there may come a day where, you know what, I don't want to get up and have to watch CNBC. Mm-hmm. You know what I mean? Yeah. When that day comes and you're done, then let me know and we can move more out of there. But for right now, he's set. Everybody's happy. They both left super happy and both relieved.
If you're in a similar situation and you'd like to learn more, again, pick up the phone. Give him a call, 800 800-913-SAFE. That's 800-913-7233. Or online anytime at safemoneyretirement.com. That website, once again, is safemoneyretirement.com. All right, we'll give you a couple of minutes to make that call. Get on Tim's calendar, and we'll continue with a whole lot more of this week's edition of the Safe Money Retirement Show, all powered by Safe Money Retirement, right after this.
Hey, it's Glenn Beck. Do you still have all of your retirement money at risk in the market? Most know that I don't do that. It's way too dangerous, in my opinion, at least. The fact the market could fall off a cliff tomorrow, yet many don't have an expert you can trust. Let me tell you about Tim Wood. Now, he's the owner of Safe Money Retirement. That's a certified financial fiduciary and a best-selling author. I met Tim personally, and I can tell you that he and his team can help you plan your own guaranteed lifetime income streams to cover you and your spouse and grow your money while protecting it from a market crash. Go to safemoneyretirement.com/Beck or call 800-913-SAFE to schedule a no-obligation free 15-minute discovery call with Tim. You know I just don't trust anyone, and so do your own homework with Tim at safemoneyretirement.com/Beck and book your free discovery call with Tim online or call 800-913-SAFE and get started today.
Welcome back into this week's edition of the Safe Money Retirement Show. As always, we're here with Tim Wood. He's the founder, president, and certified financial fiduciary with Safe Money Retirement. My name's Kevin McAlpin, and Tim and I appreciate you being with us each and every week here on the show. Well, Tim, I know we've talked a lot on this program about not having enough income when it comes to retirement. Obviously, you have inflation, taxes, and the future, let's say uncertain future when it comes to Social Security. But what about the idea of debt management when it comes to retirement? A lot of folks out there want to pay off the mortgage, or maybe, obviously, you're talking about Social Security and the timing decision there. But what if your car gave you the extra income you need to fund life insurance or long-term care protection? So, Tim, let me ask you, how has debt management really become a bigger piece of the retirement planning puzzle for you?
It's always been a really big piece, I'll be honest with you. And what I normally tell people is, because I get that question quite often about paying off the mortgage. Mm-hmm. And what I tell people usually is, do you want the numeric answer or do you want the emotional answer? Mm-hmm. Well, what do you mean, Tim? Well, a lot of people, it is a really, really, really big deal emotionally to have that mortgage paid off. Right. To know that no matter what, we own this house, we own this property, it's ours. That's a big deal for some people, and that needs to be taken into account. Everything that I do isn't just about the black and white numbers. There are gray areas. I know a lot of people just want to say everything's black and white. I'm sorry, it's not. Mm-hmm. There are gray areas, and we need to take into account that emotional feeling of knowing that your house is paid off. So that's one whole thing, but setting that aside, just looking numerically, if we were just to look actuarially at it, it depends on what your mortgage rate is. For example, had a client come in recently, they had a mortgage they'd had for years at 2.1%. Well, Tim, should we pay that off? They didn't care. They weren't emotionally, they didn't care. He's like, I don't care. What makes the most sense financially? Well, there are plans out there. Now, rates change every single day, but when I did this back then, there was a plan that I could lock them in for 10 years to make over 5%. So why would you want to pay off something where you're only paying 2.1% and you could make over 5%? That's a 3% net gain every single year. That makes sense. And then you're still paying down the mortgage. So, it's still going down over time. We need to look and make a plan for each thing individually. So can it make sense? Absolutely. Looking at debt really is a big thing when we're doing the overall plan. Again, that's one of the things that separates what we do. We do overall holistic retirement planning. Mm-hmm. We are not just a financial advisor that's just trying to grow your money as much as we can. That's great when you're in your 20s or 30s. When you're in your 50s, 60s, or 70s, you need someone that all they do is retirement planning, specializes. Kind of like if you were going to go get a surgery. Let's say that you had something, oral surgery. Well, are you going to go to a general surgeon or are you going to go to an oral surgeon?
Probably the oral surgeon, yeah.
I would think. I would, you know, or you could probably watch a YouTube video and get your drill out and do it yourself.
Yeah, you could.
You could go to someone that's what they specialize in. And that's what we do here at Safe Money Retirement. We specialize in retirement planning. That's what we do. 100% of everything we do is planning for people's retirements. And dealing with debt is a big part of that. May make sense to pay off the mortgage. I talk to people all the time that have second, third, and fourth properties. Well, what should we do with those? Should we keep them? Should we keep the income coming? Well, do you want to take care of it? And management company. I mean, there's a million things that's involved, and each person is individual and different. But looking down and seeing what all the different options are, again, I hate to always go back to everything. Seems like everything we always talk about, I go down and say it's making a plan specific for each individual. There are some times that making debt go away completely makes sense and it works for you. There's also times where it doesn't. Mm-hmm. So it's a matter of just sitting down individually and looking kind of like you said, well, if you pay off that car payment, yes, you're paying a chunk now, but there's $400 a month that you were paying on that car payment. Maybe we can reallocate that. Doesn't change your budget at all. Mm-hmm. Yes, it does right now because you're having to pay off the car, but now you've got that $400 a month into your monthly budget. We could do something else with. So, kind of like you were saying, maybe it's a long-term care thing. Maybe it's something for a beneficiary when you're gone. You want to have some sort of a big life policy, and you need to fund that. There's so many different avenues that we can go. There's no way that I can touch them all. But yeah, making sure that we've got a handle on what you've got for debt and what makes the most sense. But again, I don't think I can overstress this. It's not just what makes the most sense dollar-wise. Right. It's not all actuary. It's not all dollars and cents, black and white. There are times, many times, where, maybe dollars and cents wise, it doesn't make the most sense, but, one of the people in the couple, husband or wife, really just wants to, we have never had a house paid off. Well, that's a big deal. Mm-hmm. Yes, it may wind up making more sense financially, but in that situation, I tell people, maybe it does make the most sense to pay it off because you've always wanted to have it paid off. Well, you can do that. So I don't want to give just a generic answer, but it really is individualized based on exactly what the debt is, and does it make sense to go ahead and take care of it, or does it make sense to roll it and do something else with the money that you would be using to take care of it? Individual based on what someone's long-term goals are.
Really, we talk about it all the time, taking emotions out of retirement planning. Easier said than done at times, but really, this is separating the emotional decisions from the financial decisions, right? Where it comes to, again, you might want to pay off the mortgage. Emotionally, it might make you feel good. You might feel like you have a weight lifted, but if financially, does it make the most sense? I'm with you, though, when you start talking about those high-interest credit cards, the high-interest loans on your car, those can be a real game changer when it comes to, again, a 20, 30, maybe even 40-year and beyond retirement, can it?
Big time.
Yeah.
Huge. Just like when you take Social Security can make a really big difference. When you start Social Security based on how long you live can make a difference of over $100,000 in your pocket over a lifetime.
Yeah.
Or significantly more depending on how long you live. So yeah, again, it depends on each individual person, and that's one of the things that we talk about is debt. In the Fact Finder appointment, our first appointment that we do, one of the things we're going to discuss is debt. Do you have mortgages? Do you have car payments? Do you have high interest credit cards? Now, granted, and thankfully, most people that I'm speaking to don't have those high interest credit cards. Mm-hmm. They've already learned through the years. We've, many of us have made that mistake when we were younger. We learned, because even though people told us back then, we had to learn for ourselves.
Sure.
But we've learned, and very few of them have that, but a lot of them still have car payments. A lot of them still have house payments. A lot of them still have other things. So yeah, looking at what it makes the most sense, like you just said, in many cases it is a black and white, but in many cases it does. We have to factor in those emotions and then come up with what's going to make the most sense. And especially in a couple, what's going to make both members of the couple happy. Because it's not all about daddy and it's not all about mama. Yeah, we got to keep mama happy to make the family happy, but Daddy's got to be happy too.
Right.
I mean, it really is a two-way street. I know that's kind of a running joke that you got to keep Mama happy, but you got to keep Daddy happy too.
That's right.
I mean, it really is both ways. So, and again, that's why both people doing that RISA, so we can know exactly how people are going to be happiest receiving their income in retirement, is critical, because then we have that knowledge when we're sitting down coming up with a plan. You know, we can look at the numbers, we can look at the emotions, and we can look at what's going to make you guys individually the happiest and make sure we can come up with an overall plan to accomplish it.
If you'd like to learn more about how debt management can become a big-time piece of the retirement planning process, pick up the phone. Give Tim Wood and the team at Safe Money Retirement a call today. And here's what we're going to do, folks. For our first 5 callers, you schedule that initial complimentary, no-obligation conversation with Tim and his team. He's not only going to have an opportunity to sit down with you to learn more about your goals in retirement, but you're also going to take home a complimentary copy of his book. It's entitled Safe Money Retirement, Your Game Plan for Success. And if you'd like to get your copy, you'd like to get on Tim's calendar, 800-913-SAFE. That's 800-913-7233, or online at safemoneyretirement.com. Again, safemoneyretirement.com. Well, Tim, I know the holidays have come and gone, and over the holiday season, a lot of folks spend time with loved ones. You get together with family and friends, and even though the holidays have come and gone, I know a lot of folks still gathering, whether you're catching some playoff football or maybe you're just staying indoors with the temperatures being as chilly as they have been. But let's talk about some conversations when it comes to finances. What are some money discussions families can have when they do get together, especially if they're doing so with aging parents?
What you said actually made me think of something real quick, and then I'll answer your question. I think it was on Facebook, and it said, here's a quick tip: bring up religion and politics at Thanksgiving to save yourself some money at Christmas. Because isn't that the truth?
Yeah.
I mean, if you were to bring up that kind of stuff, they don't even want to see you at Christmas.
Right.
But here's the things. The things that you need to talk about, number one, you need to know what your parents have. You need to sit down with your parents and figure out, what do they have? What accounts do they have? How much is in them? Is it pre-tax money? Is it after-tax money? Well, Mom and Dad, if you were to pass, what happens to that? Who's the beneficiary? Okay, well, if it comes to us, we've got to have all the taxes paid in 10 years. So, there's a whole discussion there. And then conversely, with your kids, if you are the parents listening, your kids need to know what you got, because something could happen to you tomorrow. The Lord could take you next week. And if nobody knows what you've got, if it's all just stored away in some fireproof lockbox somewhere in your closet, and someone's having to get to that after you're gone, and now they're having to try to decipher, well, it looks like she's got some sort of a 401 something or other here, and this is an IRA, and then what is this TSP thing? It's going to be a disaster. I have to help people go through that all the time, and literally sitting down for an hour and just coming up with a quick piece of paper that explains what you've got. Now, you don't need to give your kids all of your account information and details and logins and all that stuff. That's not what I'm saying. But there needs to be something basic. There needs to, and it can even still be in your fireproof box. But instead of opening up that fireproof box and there being 5 accounts there with papers just shred everywhere, how about if there was one piece of paper that says, here's the first plan. It's a 401k. It's got approximately this. Here's the account number, blah, blah, blah. Here's the second plan. And it's got the logins for the websites. It's got everything right there, but it's locked in your safe box. But sooner or later, you're not going to be there. You need to let people know what they've got. And lastly, is with your spouse. You would not believe how many people come in that are couples that the spouse has no clue. Well, he's always taken care of it. Or more and more, she's always taken care of it. Brother, I've had a few come in recently that the wife is the one that takes care of the millions of dollars. So don't prejudge and think, well, it's always the man that takes care of it. No, I am seeing more and more. I mean, that percentage is growing quickly. And making sure the spouse knows. Because almost in every situation when I see that happen, the spouse has no clue. Well, I think we've got an IRA. I think, well, is that pre-tax money or after-tax money? And they'll look at the spouse. They can't answer. They have no clue.
Right.
So what happens, God forbid, if that spouse gets killed in an auto accident tomorrow? Now what are you going to do? And I'll just let that hang for a minute. Well, I don't know. I guess I'd bring everything into you and we'd have to figure it out. Okay, well, wouldn't it be a whole lot better if when you came into me, you had a piece of paper that said, okay, I know we've got a 401k and here's the login and here's the company and here's the information, blah, 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 blah. And then I know we've got a TSP and here's the login and here's the information and blah. Do you know how much easier that would make life?
Yeah.
For everybody. So sitting down with your family, whether it's talking to your parents, whether it's talking to your kids, or my goodness, whether it's talking to your spouse or your partner, we need to let people know what you've got in a general form and let them know, because sooner or later we're not going to be here. And trust me, I have helped people through this for years. It is a real challenge to, after the fact, get someone to be able to get into somebody else's account without the password, without the username, without anything. I mean, then you've got to send death certificates and proof and this and that, and it's a whole thing. Mm-hmm. I mean, it's a whole thing, and sometimes lawyers have to get involved. It would be so much easier just to know what everybody has. So, can it be challenging? Yes. Hey, let's take 30 minutes. Let's have a quick family meeting. Let's send the kids in the other room to play Nintendo or whatever the heck it is they play these days.
Right.
And let's sit down. Dad, I know you've got all these accounts. Can you just kind of give us or write down something and let's put it in your lockbox with the stuff for the accounts or whatever, or vice versa. Hey, kids, y'all need to know kind of what we've got. That's what, that's exactly what my parents have done. In their lockbox, they've got a piece of paper that shows here's the accounts, here's approximately what's in them when they did the paperwork. I can figure that out. Here's how you log in, here's the account numbers, all of that stuff. Just making sure anybody that might get that can know what it is, so they know what the tax ramifications are, what their options are. Do they have to take it all right now? Can they take it 10 years from now? What are the options? And that all depends on where the money comes from.
If you'd like to learn more about having those money conversations with your families, you want to figure out how to start those conversations, well, give Tim Wood and the team at Safe Money Retirement a call today. 800-913-SAFE. That's 800-913-7233, or online at safemoneyretirement.com. That's safemoneyretirement.com. Well, Tim, time flies when we're having fun. It's been another fantastic show here today. And before we do run out of time, sir, the floor is once again all yours for the final word.
Thanks, Kevin. Great show. We discussed several really important things today. First of all, we discussed the potential for the bubble bursting with Mohammed El-Arain from Yahoo. That's a real problem. That bubble is going to burst sooner or later. The bubble that we are in is going to burst sooner or later. We've already seen some minor bursts, but the big burst is coming. We don't know when, but it's coming. Make sure you're prepared. Then we talked about what should we do with debt. Again, let's make a plan so we're prepared. And lastly, we talked about family. And again, it's make a plan so we're prepared. People, are we seeing a pattern here? It all comes down to making a plan, and for each person, it's individual. I know y'all hear me say that every week, and it might get a little frustrating, but it's true. You could get two couples that come in, and literally they could have the exact same dollar type of accounts, but their solutions for them are going to be totally different. So you need to sit down with someone that can look at your specific situation, that's a certified financial fiduciary that has your best interest at heart, that's totally independent, preferably that's also a retirement income certified professional, so they know all the different ways you can get income and how to basically do the best that you possibly can with all of the systems that are out there, because we want you to have your best safe money retirement.
The preceding information does not represent tax, legal, or investment advice. Obviously, by contacting us now, you are only taking the first step towards protecting your retirement. No information presented today should be acted upon without meeting with a qualified, licensed insurance professional. It is important that you read all insurance contract disclosures carefully before making a purchase decision. Interest and other guarantees in annuity contracts are subject to the claims-paying ability of the insurance carrier that issued the contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.